Hey guys, welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing, and this is going to be a jammed-packed video for you guys. So last week I came out with a video on November 5th called Feeling FOMO, Watch This First, and our stock's about to turn. And in that video I talked a lot about the VIX, Tesla stock, just the froth that was in the market, as well as the Fear and Greed Index, which is still currently at 82 under extreme greed, and that's after two pretty volatile sessions, which we can see in the VIX as it's been spiking up over the last couple of days, and no different from where we were about a week ago, also under 82, extreme greed. A month ago we were under fear at 32, and a year ago under greed at 65 at the beginning of that vaccine rally at the beginning of November. So we have a lot to get into. If you're new to the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, precious metals, all the fun stuff for investing for the long term. As always, smash that like button. So one thing investors are really paying attention to is the CPI data that came out yesterday jumped 6.2% in October, which was the highest inflation surge in more than 30 years. And it's not that we haven't been focusing on inflation for most of this year, but we were expecting an inflection point, sometime in the fall, hopefully looking into next year at this point, but that's where investors are kind of getting freaked out a little bit, because now we were kind of expecting things to be transitory and start inflecting toward the downside, but yet we keep jumping higher and higher month over month. Additionally, this week we also had a crazy amount of earnings. For example, we had PayPal that went down, AMC that kind of went, sideways down, Roblox jumped up, Virgin Galactic sideways, Lemonade dropped, Smile Direct Club dropped, Palantir dropped, Workhorse I don't know, Neo, that one I think dropped a little bit at first as well. Coinbase dropped. I think it recovered a little bit. I think Fubo also dropped. Disney dropped. Beyond Meat dropped. Tattooed Chef didn't report their earnings, but it also dropped yesterday as well. So this week hasn't been very kind to the bigger names that reported earnings this week. And taking a look at the charts, and actually I had this one last open. This is a stock that I used to own back in the 20s, and just an example, guys, if you have a stock that you think is going to be really good for the long term, but it hasn't moved very much in, 6 months or so, it just shows that things can change very, very quickly. And the reason I got out of this stock is because I just didn't feel comfortable, because I didn't know enough about it. So I got rid of it because I followed my rule of, if I don't know what it's about, don't invest in it. But at the same time, if I just held on to it, it would have gone up. So, it goes both ways. You never truly know what's going to happen in the stock market. But if you have your convictions and the fundamentals are there, they will eventually come to the light, and Wall Street will put money into that stock. Because long term, the highest correlation between a successful stock and a non-successful stock are fundamentals. So you're looking at balance sheet, profitability, management, free cash flow, and so on. And this is a nuclear play for energy when it comes to electricity. I think LEU stands for low enriched uranium. I actually was watching a different YouTube channel, and they said buy this one, it has a really big runway. And then I just bought it just because, and it traded sideways. I lost conviction, I just sold out. Clearly that YouTuber knew what they were talking about. Okay, so first, starting off with the dollar index, this one has found strength over the last few trading sessions. We're now at 95, and I want to zoom out to the monthly and look over here. So we saw a double bottom back in December, January, and May, June of this year, and then we've just been climbing up. This one's breaking up perfectly. It looks like it's just going to continue running up higher. And looking at the daily, this one really respects the 20 and the 50 EMA, so whenever there is a pullback, you're looking at these two zones over here. Next up, taking a look at the VIX. So in the video that I posted last week, I was mentioning at how we were at the bottom of this range when it comes to the VIX at around 15 or so, and usually when it gets there, the VIX likes to spike. But remember, when the VIX spikes, it's usually very acute, and it doesn't last for very long. There's a lot of fear all of a sudden, and then things kind of relax a little bit, unless there's a bigger kind of event going on. But even zooming out a little bit, you see that it spikes, and then it kind of relaxes a little bit. Here, it was a little bit more. There was more volatility in September of October of this year, but even, let's say, in August, do you remember this pullback? I don't really, where it spiked, and then it stopped, and then we got back to normal. It spikes, and then stops. Spikes and stops, and so on. Unless you are having a pandemic, that usually is a pretty good reason to spike. This one went up like crazy, and then, but remember, at the time, the world was ending, and things were really crazy back then. Of course, now it's so easy to say, oh, we should have bought at the bottom back in March of 2020, but at that time, we were all kind of running around with our heads cut off, having no idea what was going to happen. Taking a look at the put-call ratio, so when we looked at it last week, it was around over here, meaning more calls were being opened than puts at the time, and usually when that happens, Wall Street likes to expire those calls worthless, and that goes back to the whole fear and greed index. When everyone's really greedy, that's when usually Wall Street likes to take advantage of those people being too greedy, and vice versa. When everyone's really fearful, thinking the market's going to go down, that's when all the puts get expired worthless, and then the stock market starts recovering toward the upside. So looking at where we are right now, we're at about 0.7. So it looks like more calls are still being opened compared to puts. We're no longer at that extreme level that we were last week. Taking a look at the 10-year, this one was actually pulling back for the most of last week, and today we're having a pretty green candle. So right now we're at 1.55. With all this inflation, this one should be going up more than it has been. So it is kind of interesting to see it not doing so, but if it continues the strength that we're seeing right now, the next stop would be here around 1.7 or so. Taking a look at the FANG index, and I wish this was Microsoft instead of Netflix. So I'm going to be looking at all the separate big tech stocks individually from now on, but taking a look at the index anyway, ever since it's been in this channel, whenever it was below that 50 EMA, it was a buy. And we even see that as recently as September, October, and right now we're approaching that 50 EMA. The closer we get to those moving averages, usually it is a better buy. At least it has been, again, for that last year or so. And before we get to the major indices, the Dow Jones, the S&P 500, and the NASDAQ, I want to take a look at the seasonality index of the S&P 500. It doesn't align exactly with what happened last year or this year or any of that. For example, August we were really hot, and then September into October we went down, but then October we had a recovery into November, and then now we're kind of in that down cycle again. But seasonally, Scorpio season is a good time for the gains. And what we're going to see in the charts right now kind of gives me an indication that we could continue seeing more bullish action into the end of the year and into a Santa Claus rally. So firstly, looking at the Dow Jones Industrial Average, so we had a really strong October and first week of November, and we got out of that range that we were stuck in for the past few months. So we broke out, reached that high, and now we're pulling back, which is a healthy move that I talked about last week. Again, if we pull back, this resistance becomes the new support, or even the 20 EMA or the 50 EMA. Any one of these three could end up being support, and then we would continue seeing more bullish pressure toward the upside. Looking at the SPY, similar kind of idea. So this trend line over here ended up being somewhat of a resistance point. So we're pulling back now. So we have, for example, this resistance over here from September could be the new support, or the 20 EMA, the 50 EMA, this trend line, and then continue seeing more bullish action. And NASDAQ, same kind of idea. So over here would have been the resistance point, the top in September, or the 20 EMA, or this 50 EMA. And on this channel, I get a lot of criticism, and people keep telling me that I'm not giving a straight answer, whether it's going to go down, sideways, or move up from here, and that I'm losing all credibility. But I would actually say the opposite. By saying that I don't know where it's going to go, but these are the potential things that could happen, be prepared for any one of these scenarios, I would argue that gives me credibility and not just saying anything, have an answer kind of thing. So I truly don't know what's going to happen, to tell you the truth, guys, or else I would not be on YouTube and probably on an island somewhere. As long as Jerome Powell keeps giving us the same response, there's no reason to not be bullish so far, especially because of this technical analysis. The charts are telling us we are okay for now until they're telling us otherwise. And taking a look at the IWM, same kind of idea as the Dow Jones. We broke out of a channel, this one being a lot more range bound than the Dow Jones was. So we broke out of it finally. We found that resistance. Again, now we want to pull back. This zone over here would be beautiful, where the 20 EMA and this blue line where the resistance was from before. That would be a beautiful place to pick up some IWM or some TNA for that matter, which is a 3x leveraged ETF. So for a trade, that would be a pretty good entry point. If we were to break this area, that would really suck to go back into this channel, but it could even find some support at the 50 EMA as well. We just have to see what happens with that one. Taking a look at Bitcoin. So this one reached all-time highs a couple days ago, and then it sold off yesterday to about 63,000. But that's just Bitcoin for you. It's very volatile in nature. But I know the YouTube community is very bullish on it in the short term into the new year, especially with all the inflation and people using it as a hedge. Interesting to see where Bitcoin will go. A lot of people are saying 70, 75, 80,000. I think it's totally possible, knowing how volatile this one can be to the downside or the upside. But who knows? Bitcoin is just so unpredictable. The charts can tell us one thing, but it could just do the other. So we'll have to see what happens with that, as well as Ethereum. This one was at all-time highs until it pulled back yesterday with Bitcoin, but it looks like it's recovering pretty nicely with this green candle today, so we'll have to see if that continues. Or we find support at that 20 EMA, which it has been doing perfectly ever since the beginning of October. This one has just been straight up grinding toward the upside, making new all-time highs. And taking a look at Cardano, this one had actually reached again the middle of that range at 236 yesterday, and then sold off again with Bitcoin and Ethereum. We're still at the bottom of this range, and I know a lot of people that are in Cardano just waiting for it to break the upper range, so we'll have to see if it ends up doing that or not. Looking at the commodities, so the last video I posted a couple of days ago was on Bitcoin, Ethereum, and specifically gold and silver. How they were looking really strong on the charts, and they actually did break out because of that inflation data that came out yesterday. So right now we're at that 1863 level. And if gold is going to continue ripping upward, if it does find a weakness in the short term, it'll maybe come back down to this, let's say 1828 level, 1825, and then potentially a lightning bolt toward the upside. As well as silver, same kind of idea. This one's at resistance point as well at the $25 mark. So if it does pull back to, let's say, 24.75, that would be a good area for it to find support. And not to mention, these moving averages are also going to be coming up here, catching up to where the price is right now. Oil has been trading sideways over the last couple of weeks, peaking at $85 a barrel, pulling back to the 50 EMA, a little bit above it actually, and then now trading sideways, and then trading between a range of, let's say, 79 all the way up to about 85. And taking a look at big tech, first off with Apple, so this one has a really big impact on the NASDAQ and the S&P 500, as it is now the second biggest company, weighted company in both of them, as Microsoft has taken over. So right now we're at the moving averages, and I'm not counting on seeing the lows that we saw back in September or October, even though it's possible. I'm not counting on it. I'm more focused on this blue line over here, this trend, as well as the moving averages here, although it is possible, guys. And that's mainly because I am bullish going into the new year. I don't think we're going to have that much more weakness. Looking at Microsoft, same kind of idea as well. When these ones dip, when Apple, Microsoft, and Google, as you'll see in a second, when those ones dip below their moving averages, rarely do they go that much more below them. Only was it during the market crashes during March of 2020 did they really fall off their moving averages, which we can see, where is it? Which we can see all the way back over here. That's the furthest it went from the moving averages during that March crash. Otherwise, when it's below those moving averages, it's just always a buy. When it comes to Microsoft and Apple and even Google over the last 4 or 5 years. So right now we are pretty extended above the moving averages right now. So we'd like to see some kind of support on either one of them, and then it's just a buy, and then it just goes up. I know I'm oversimplifying it, of course. Taking a look at Google, same kind of idea. Especially over the last year or so, that 50 EMA has proven as very strong support for us. Same kind of idea. So right now we're above both of them. If we see extreme weakness, it would be somewhere in this area around 2,700 to 2,800. Taking a look at Amazon, this one I thought was breaking out, but it's also pulled back with the NASDAQ. This one's been more volatile and range bound. It's been the worst performing FANG stock over the past year as well. So we're really looking for it to break out sometime in the next few months. If we see weakness, we're hoping that it's at these moving averages or this blue trend line, and then continue seeing upward pressure afterward. Facebook, this one has seen a lot of weakness over the last couple of months, a lot of bad news, as well as the NASDAQ going down. It hasn't recovered just yet. It did break that trend line, I think, when that meta news came out last week. However, it has seen more weakness, but it looks like this trend line could be acting as support. But right now, it looks like it's trading sideways into a new channel between, let's say, 345 and let's say 320 level for now. And I'm also going to add Tesla. I mean, I could just keep going and go to Nvidia and on and on and on, but I got to end this video somewhere. So this one has been crazy. So it did sell off after Elon Musk saying that he was going to sell part of his position. It looks like so far that he has, according to reports out there. So on Tuesday, we had a really big sell-off. I think it went down like $100, which was like 12. I think it went down like 12% on that day. Then yesterday it had recovery, and then today it gapped up and then it went down. So Tesla stock being Tesla stock, it's a super volatile growth stock in the short term, but long term, this is a lot of retail investors, including myself's favorite stock. We have high hopes going into 2030, which is 10 years from now. Or technically actually 8 years, which is kind of crazy to think about how the last 2 years have just flown by. Otherwise, that is the end of my video. Thank you very much for watching. For those that stayed until the end, you guys are the best. And let me know in the comments below what you guys think is going to happen over the short term with the stock market. Do you think it's also going to rally into the new year? Or are we not done yet with all this weakness? Let me know what you guys think in the comments below. As always, subscribe, like, and I will see you in tomorrow's video.